Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao and I'm here to get you an update on commodities. And today the focus will be on oil prices and metal prices, which continue to slide. Joining me in conversation today is Prathamesh Malia from Angel One. He tracks the commodity space very closely and he is here to help us understand what's happening in the space and whether or not it's a good time to buy or trade or invest. Prathamesh, thank you so much for taking time out and joining us today. Now, oil tumbled to the lowest level since December. There is unrest in China, of course, which is because of COVID-related curbs, which is really spurring all of the selling. Talk to us about the way forward. Are oil and metals both sort of cracking right now because of a similar trigger?
Hello, Karunya. Good to have me on the show. I think oil prices rally has had quite a good rally in past couple of years, but now situation seems to be in control, except in China, wherein new COVID infection seems to be a worry for all the investors across the globe, because of which you are seeing correction across the commodity spectrum, whether it be oil, whether it be metals. So if you're asking whether it is a good time to invest in commodities, I think given the price correction from the topmost high points for all the commodities, copper, zinc, nickel, oil prices has crossed $140 to almost $70 now. So it really gives an opportunity for bargain investors to chip in this asset class. But from a trade perspective, it would be a very volatile week or a fortnight in the coming days, purely on account of COVID policies from China, the demand destruction that has happened, because of which oil prices are correcting. So yes, from a trade perspective, I would be on the sell side. But from an investing perspective, if you have an open position on the spot market, I would be on the buy side.
Okay, well, that's an interesting take. And do you also have a similar opinion when it comes to base metals? Because we also have seen copper correct a fair bit. Iron ore in gallium also fell about 2% odd. You have cooking oil futures which have tumbled. So a host of other commodities are also looking weak right now. So do you have an optimistic long-term view on any of these as well?
I think taking into consideration the electric vehicle story that is spanning across the globe, I think industrial metal would be the story going forward. I think the usage of nickel, the usage of zinc, the usage of copper would definitely rise if you're really talking from a long-term perspective. But then from a long-term perspective, and that also in commodities, more than 2 years or at least a period of 5 years is what we are looking at. But then from an Indian perspective, we really do not have that much of time frame and horizons as far as trade is concerned. But then we are into December now. The year is going to end. December is on the December. Christmas is on the line. I think the trade would be a thin counter for the next 1 month. And there would be a lot of reshuffling that would happen as a part of a portfolio, wherein hedge fund managers would be reshuffling depending on which asset class has given what performance, and
Yeah.
basis which you will definitely have reactions going into the new year. But then I think I have a lot of confidence on copper as a metal, zinc as a metal. The usage of both these commodities in as a part of electric vehicle story is what I would be counting in.
Okay, well, zinc and copper look interesting, but I want to circle back to crude once again. To what extent do you think are traders cautious about the OPEC plus meet, which is in the early part of December? There is Western price cap on Russian oil also, which is a bit of an overhang. So, in the next say a month or so, of course the latter half of December will be people going off into the holiday season, but in the next couple of weeks do you foresee more volatility, more maybe selling happen as far as crude is concerned, both Brent and WTI?
I think the intention of OPEC is to have a respectable price as far as oil goes. And if it goes beyond their surpassable limit, that is where the production quotas come into picture. They would want to balance the oil market by reducing the production, increase the oil prices possibly. But taking into consideration the recent fall of oil prices, it really gives a thought process for the OPEC to possibly balance the oil markets by reducing their oil production quotas. And if something like that happens, you would again see oil prices bouncing back. From an investing perspective, the recent correction has definitely given an opportunity for those investors who have missed the rally before. And I think in dollar terms, $60 is what the base looks like. At WTI is $70 at present. If oil price has to correct, and if it corrects, depending on how China reacts to its COVID policies, 60 would be the base price. And take into consideration the recent cap that would be applicable from December 5th onwards, as far as Russian oil exports go. I think that is already discounted in the market, because of which you have already seen oil price correction. But then I think China would be the way going forward, because China is one of the important consumers of oil, second largest consumer of oil. So how China pairs its COVID policies, the demand destruction scenario, is what would be an important point to ponder in the coming fortnight.
Okay, well, that's interesting to know. But you said that it's a good time for those who missed the rally in the earlier part of the year. Perhaps they could enter into this commodity, crude oil. But do you believe that we could once again scale back to those levels anytime in the next couple of months?
Next couple of months, I think oil is a very volatile commodity. We have seen it going negative once, which has never happened in a history of any asset class. So, if
Yeah.
you're really talking about a consideration when oil prices can possibly bounce back, yes, there is a possibility. And if OPEC sees some discussion wherein they are reducing their oil output quotas and would really want to balance oil prices, that is one event that I would look for as an oil trader or as an investor of commodities.
Okay. And as far as metals is concerned, are there any no-goes as well for you? Any specific names that could see more pain ahead?
I would not see pain in any of the metals. In fact, the correction that has happened in the recent weeks, in the recent correction, would give you an opportunity for those investors who have missed the rally in base metals as well. But then, if you're really asking me from a trade perspective, I would not enter at this point in time. I would let the markets and the dust settle down. I would wait to have some consolidation in the base metal market. And once a flow of news, whether it is positive or negative, comes from China, that is the driver of all the metals going forward.
Okay, all right. Thank you so much, Prathamesh, for joining in and talking to us in detail about what's happening with crude and base metal prices, why they're sulking, and what's the likely way forward. Great to have you on board.